Hey everyone, Andy Smith here with A&N Mortgage, back with another 5-Minute Friday. And this week I'm joined by Max Ieuter, a insurance advisor with Secure Futures. Max, welcome.
Thanks, Andy. Thanks for having me.
So it wouldn't be a 5-Minute Friday without a 5-minute timer. So here's our timer. Let's get started. So Max, first question everybody asks, what type of insurance do I need when I'm buying a home?
It's a great question, and it really just comes down to what type of property you're buying. If it's a condo or a townhome, it's going to look a little bit different than if you buy a single-family home. For instance, a single-family home, as we mostly know, it's going to be covering the dwelling itself, so the exterior and the interior, as well as your contents and your liability. Whereas with a condo and a townhome, you are oftentimes working with an association who's going to have a liability to cover the structure and structural components, usually things that are found within the walls. So oftentimes you might look at your townhome or your condo association contract and you'd see something that stipulates the unit owner is responsible for drywall in or paint in, and that's including appliances, that could include furnishings and floor coverings. So really understand what your contract and your association wants you to cover.
So then something people are always going to ask both of us, but especially you, how am I going to get the best rate or the lowest cost for my insurance?
It's a question I get all the time, Andy.
I'm sure you do.
There's a couple things you can do preemptively. The first thing is to understand what makes up an insurance rate. There are a myriad of factors, so I'll hit on a few of them. Disclosing first that I'm not an underwriter and every company does do things a little bit differently, but things like your credit score make a big impact on that, your prior insurance history, and that includes lack thereof. If you've never owned a car before, your auto insurance rates are going to look a little bit different than if you've had a car for 5 years. Same with owning a home. A lot of times companies are going to offer discounts for getting some quotes in on time, giving underwriting some time to get things together. And then of course, think about systems and protections in place for your home. Alarms for water are a big one. Your smoke and fire alarm are pretty standard these days, but think about what a lot of underwriters are dealing with, and that's trying to battle issues with water. That's something we really see.
When I'm reading my insurance policy or when you send me my quote, what should I be looking out for in that quote? What language should I look for? The limits, that kind of stuff. Can you tell us a little bit about how to read a policy?
A lot of people don't want to go through the whole contract and figure out what is exactly what's included, what's excluded. A good advisor or agent is going to help you through that and understand what the policy is going to provide. And every policy is written a little bit differently. Some companies offer a little bit more, some companies offer a little bit less. At the end of the day, you need to understand what it is you are going to need to cover and insure yourself. So if it's a single family home, look at that coverage A limit, that's the dwelling. That's going to be your starting point, and everything's going to sort of base off of that with the exception of your liability. But you want to make sure that your home is insured to value.
So Max, diving in a little bit more to the details here, can you talk a little bit about why we might see the home appraised value is different than the dwelling limit on our insurance?
When you look at what an insurance company is aiming to do, they're strictly looking to replace what once was before a loss. And to do that, it's simply rebuilding. So if the home that you've just bought burns down in a fire, the insurance company is going to pay to have that home rebuilt. Those costs are coming from labor, materials, and some other fees and things that might be associated that a contract for an insurance company would provide. Whereas the appraisal, the market value of the home is going to take into other things into consideration, school systems, what other homes have sold for. It's two completely different ballpark numbers there.
We're just about running out of time here, but I want to touch on this to finish up. So we talked about top tips for those people who are, maybe in the property search or they're working with their own agent, they're about to put an offer in. What are your top few tips for those people?
Really, it's just, at the end of the day, finding an advisor, an agent that you trust, because even though you've gone and closed on your home, the insurance doesn't stop there. You want to make sure that you develop a relationship with someone who's going to stay in touch with you and be proactive on your policies, because you're busy. You don't have the time to go through that. A good advisor or agent is going to do that for you at the close, before the close, and then further through on the duration of your need for insurance.
Absolutely, yeah. Max, this has been great. I've just heard our timer go off, so I guess we should wrap it up. We really appreciate you joining us, and you have so much knowledge to share. So I definitely encourage people to get in touch with you.
Wonderful. Thanks, Andy. It was fun. I appreciate you having me on here.
If you are looking to finance a new home, second home, investment property, or refinance your current home, contact me today.